So, continuing the question about Obina, the sole trader, then we got to the profit and loss account where we're lessing the operating expenses. I think you appreciate the expenses owing and the expenses prepaid information we had in the additional information. And as it were, we had exhausted the trial balance. I think the last item for expense was the bad debt. But again, we acknowledge that the additional information gives further bad debt. So we added the 200 to the 600 as the total bad debt in our profit and loss account. Now, when you exhaust the items in the trial balance, you now move to additional information, purposely for certain things like provision for depreciation and provision for bad debt and any other outstanding adjustment you have to make. So let's quickly run through the additional information. Closing stock, we don't have an issue. Commission unpaid, we dealt with it. Provision for bad debt is 10% on debtors. Professors, I think you appreciate that I indicated to you that this provision is more or less like a charge against the profit. Okay, you are charging some amount against your profit to take care of debts that are possible or have the likelihood of not being paid. Okay, so I indicated that there are three scenarios: when you create it first, or when you have to increase it, and when you have to decrease it. And so I gave you the idea that you always have to make a comparison of the old provision, which is how much provision did you have. So I cited a scenario of you making provision for your transport, okay, and then you go to the bus terminal, and then there are differences in the fare, and you may have to increase it or decrease it. So it's always important you compare the old to the new, because this will give you or help you determine whether you have to increase it or decrease it. Okay, so the first creation is more or less like there was nothing for the old and you are now creating it. So let's use this strategy to see how we can work around with the provision for bad. So the old one is always given in the trial balance. If you check the trial balance and it is not there, it means the old is 0. Please listen to these words carefully and apply them when you see provision for bad. So consider old versus new. The old is the amount given in the trial balance. So you go through your trial balance and check for any provision for bad debt, or sometimes provision for doubtful debt. If we check this question, we don't have provision for doubtful debt. What we have is provision for depreciation, which is a different thing. So it means that the old one is 0. So the old is 0. Then we check for the new. Where would you find the new? The new one is always in the additional information. The additional information tells you about the new provision you have to make. And that is here, telling us that we should make 10 provision for bad debt is 10% of debtors. What do we have to do? We have to multiply 10% by our debtors figure. But note that debtors figure should be the net debtors figure. So let me indicate that to you. So the new provision is 10% multiplied by our debtors figure. But I'm saying the debtors figure should be one that is adjusted with any bad debt in the additional information. So pay attention to how I go about it. So 10%, I come in here, and this is our debtors figure, right? So I was on the point of letting you know that always check the additional information. There might be some outstanding bad debt, okay? And this is it, that 200 bad debt. So in calculating your provision, if you are given a rate 10%, 5%, if you are multiplying, pick your debtors figure, check the additional information, emphasis on additional information. If there is any outstanding bad debt, so in this case there's 200 bad debt, we'll less it from that 15,000 before we multiply the 10%. So if we do our computation, that should be 10% multiplying 14,800, and that will give us a figure of 1,480. Professor, do I have to take it again? Prof. Sandra, did you get the point very well?
Yes, please.
Please come again. I can't hear you. Are you okay?
Yes, please.
Great. Prof. Alexia, do I have to restate the point? Did you get the understanding, or I have to retake it? Okay. So I'm telling you that when you are preparing your trading profit and loss account and you see provision for bad debt, use this strategy, okay? And the strategy is compare your old provision to your new provision. Okay, now the old provision will be in the trial balance. Okay, so the old provision is in the trial balance. Okay, so you check the trial balance for your old provision, and then the additional information will give you your new provision. However, there are some questions when you check the trial balance, there will be no provision. In that case, you put 0 for the old one. Okay, then you go to the additional information and check. And here we were told that it should be 10% of debtors. So ordinarily, we'll multiply 10% by our debtors figure. And the debtors figure is 15,000, right? But I'm also saying watch out for any bad debt in the additional information. Because the idea is that if you are making a provision on your debtors and you have written some debt off, you have to less it. Okay. Example, Frank owes me 1,000 cedis. Dameki also owes me 20 Ghana cedis. Altogether, that is 1,020. Okay. And then I feel that Dameki's debt is very small, insignificant. So I want to write it off. I want to cancel it. Then again, I think that, okay, Frank's debt is too much. So let me make a provision just in case he's not able to pay all the 1,000. I'll use that provision at least to cushion myself. Now, if I'm making a provision of 10%, it wouldn't make sense for me to make the provision on 1,020. Why? Because I have written off the 20. So my 10% will be multiplied by the 1,020 minus the 20 bad that I've written. So in this case, since we are being told that we need to further write off bad debt of 200, you will less it from the debtors fee before you multiply that 10%. And that is what I did here for us to get our new provision. So the 10% times the debtors balance minus any bad debt. There are some questions there will be no bad debt, so your 10% will go straight away on your debtors. Okay, but watch out for that because If you miss it, your calculation for provision will be wrong. Okay. So there's it. So our new provision will be 1,480. Now, if you do the comparison, your old is 0. You didn't have any provision. Your new is 1,480. So it makes sense to say that you have to increase your provision, or you have increased your provision from 0 to 1,480. And I indicated to you the last time that the increment or the increase in provision is an expense, right? It's an expense. To make you understand, if you go to the bus terminal, you made a provision for 50 cedis for your transport. And then you go there and the new transport fare is 70 cedis. What do you have to do? It means you have to spend 20 more. So if you are spending, that's expense, right? So increase in provision will be part of your expenses. So increase in provision for bad debt. Okay. Add it to your expenses. That's 1,480. So that is how you deal with the provision. Please use, for now, use the old versus new technique. You can also prepare the T account, but if you appreciate this old and new technique, you can always work around your provision for bad debt. Let me see if I can take us to another question where we have the provision for bad debt. So at least you appreciate how questions can be asked around. So let me get one question where we have provision for bad debt, and then we'll apply this same old versus new and see whether we can determine the increase or the decrease in the provision. Any questions so far, professors? If you have any question. So if you are taking notes, the simple things I'm telling you is that for your provision for bad debt, always do a comparison of the old and the new. The old will be in the trial balance. If there is none in the trial balance, it means the old is 0, right? And then the new one will be in the additional information. Okay. So whatever you are given in the additional information, you go and calculate it. But like the example we saw, if you are to multiply a rate on your debtors figure, make sure you less any outstanding bad debt in the additional information. Okay. Not in the trial balance, but in the additional information. So let me take us through one question here. Okay. Question will be here soon. Okay, so we have this for honest deals. My specific aim is on the provision for bad debt or provision for doubtful debt. So we are using the same old versus new, right? So if you check the trial balance, let me do the analysis here. So we have the old and then the new. So the clue I've given you is that your old will be in the trial balance. So go to your trial balance and this question. This is our trial balance. And let's see. Provision for doubtful debt. There you have it, 2,500. So you put that figure there. Is it the one we just looked at? There was no old provision, so it was 0. But this one has 2,500. Then for the new one, we come into the additional information. Let's see what we have been told about provision for that. They are telling us that it should be increased. So provision for that for that to be increased to 3,000. Okay, to be increased to 3,000. So my question, professors, and I need an answer from you. What is the new provision? What is the new provision? As in the amount for the new provision. Based on the statement that we should increase it to 3,000. Then what is the new provision? Prof. Sandra, would you give it a try? Okay, let me put the question in a different context. The old transport fare from Accra to Cape Coast is 2,500. You go to the station and the new or you are being told that their transport fare is to be increased to 3,000. So if I ask you, what is the new transport fare now? What would you tell?
Yes, I think 500.
You think 500 is the new transport fare? Are you really sure about that? Okay, that's a nice opinion. Any different one, or you share in the same view, Frank? If you can share. So the old transport fare was 2,500, and you are being told that transport fare is to be increased to 3,000. What is the new transport fare? Prof. Alexia, you may want to try by typing in the chat. Prof. Frank, I'll be glad to have your thoughts on this. Okay, Prof. Alexia says 3,000. Frank, yes, let's hear. Unless maybe you are not,
So I'm not really sure.
it doesn't matter. Just give us your opinion. It doesn't really matter.
Okay, I don't.
You don't know. Oh, but this what you a very practical question. You take a car from I think you are in Accra, right, to Cape Coast. Now you knew that the old transport fare was say 76, and then you hear in the news that transport fare is to be increased to 100 cedis. If you are asked, Frank, what is the new transport fare? How much would you put?
To be 30 cities.
30 cedis. Okay. So I think that Frank and Dameki give answers that will work in the subsequent analysis, right? But the new transport fare or the new provision is 3,000. Okay. Now, Frank and Dameki sought to only look at how much the transport fare has increased. But the increment is not the new fare, right? Because if transport fares were 70 cedis and you are told that it's to be increased to 100 cedis, then the new transport fare is 100 cedis because it has been increased from 70 to 100. So that difference of 30 is the increment, right? So applying the same scenario here, it means that the increase in the provision is the 500, okay? Is the 500. Or in the case of the transport scenario, the 30 cedis per franc indicate. So always be careful in getting your new provision. Set practical examples, and I think it will help, right? So just reiterating the point, the old transport fare was 2,500, and you hear in the news that transport fare is to be increased to 3,000. What it means is that the new transport fare will be 3,000, running into an increment by 500. Okay, so in your profit and loss account, you are only interested in the increment, right? So since it's an increase, it will go to your profit and loss account as an expense. Now, it is when you go to the balance sheet that this new provision is deducted from debtors, as we saw it last time. But for now, our focus is on the profit and loss account. So you pick the increment or increase. Please, any questions on this? So let me just demonstrate that to you here in the solution. So you see provision or increase in provision 500 as part of our operating expenses. Then when you come to the balance sheet, the new provision, which we saw to be 3,000, you see it here being deducted from the debtors figure. Okay, so let's check another question. This time I'll be glad if my professors can do the analysis and tell me. But I appreciate your thoughts so much. So some of you gave me the increase and some of you gave me the new provision. Okay, so let's look at this question too. Because this one is highly examinable. Most of the questions on TPL come with provision for bad. So it's very, very important. You take your time to understand. So let's look at this question from so we're given the trial balance of OB now, and you see that here with the additional information, right? So I want my professors to do the analysis, which is compare your old to the new, right? So looking at this trial balance, do you see the old provision? If you have identified it, please let me know. Okay, I think it's here, right? The provision for bad debt in the trial balance, 2,400. So that will be the old provision, right? So let's put it down here. So our old provision is 2,400. Then we check the additional information for the new. And what are we being told? We are being told that provision for doubtful debt is to be increased to 10% of debtors. So 10% multiplied by our debtors figure. So we go to the trial balance and pick the debtors figure. Debtors, these are debtors. So you pick it, it's 29,400. But I told you, check the additional information if you have any bad debt to write off. And this question, no, this rate prepaid telephone accrued. There's no bad debt. Unlike the question we're solving, right? Where the scenario we're solving where we had to, as it were, less the bad debt of 200. I wanted us to see that. But I think you appreciate that in that scenario, there was a bad debt in the additional information. So we had to, there it is. Okay. So you see, we were multiplying the 10% by our debtors figure 50. But because there was a bad debt in the additional information, we deducted that. But in this question that we are looking at right now, 10% times the debtors figure, but there is no bad debt here. So we go ahead and do the calculation, and I think that will give you 2,940. So you now have the old, the new. You can do the comparison to see whether it has increased or decreased. And I think that professors will agree with me that there is an increase of how much? 540. Okay. From the old to the new, this is the increase. So this again will go to your profit and loss as expense. It's not always the case that you have increase. There are some questions you have a decrease. Let me see if I have another question down here to assess the provision for bad debt. I think that is, but there are some questions when you compare the old to the new, you get a decrease. Please, if it's a decrease, you take it to your other income. Okay, so you indicate decrease in provision and you add it to your gross profit as part of your other income. I want to believe I've exhausted all necessary points on provision for bad debt. If you have a question, please ask. Okay, no questions. That's great. So we are done with this provision for bad debt. We continue the question, and I think we've dealt with telephone, accrued salaries, rents, received in advance. We've done that. The owner withdrew goods. We've done that. The owner took from bank. So this will affect our bank and drawings, right? It will not be in our profit and loss account. Interest on loan, 10%. Gentlemen, when you see interest on loan like this, don't waste your time. Just go to your profit and loss account. Interest on loan is an expense. So calculate the interest, 10%, multiply it by the loan amount. So let's check our loan amount, and that's 140,000. So multiply 10% by 140. I think that'll give us 14. And that's how you deal with interest on loan. Pick the rate on the loan. Sometimes it could be 5%, 10%. Multiply by the loan amount, and you get the interest on as an expense. When you go to the balance sheet, you only present how much has not been paid. So if all the interest has not been paid, it goes there as a liability, right? Because you are owing, you haven't paid. So that's for interest on. Finally, we have to deal with provision for depreciation, right? And I told you one is on cost, one is on book value or reducing balance. Please, if you see this way, very simple. The first one is on furniture. So we indicate provision for depreciation on furniture. We are being told to calculate 10% on cost. So 10% multiplied by the cost of furniture. And please, when you are picking the cost, be very careful. Come to the debit side. That's where you find the cost. Some questions make it easier by adding it, cost. So there you have it. Furniture at cost, 95,000. You put it that figure. You do your calculation, you have your provision. So that will be 9,500, 10%. And the second one is on machines. For the machines, we are being told reducing balance 5%. So look at how we go about that one. So provision for depreciation on machine. For the reducing balance, take the rate 5%. Multiply by net book value, not the cost. So what is net book value? Net book value is you picking the cost. Okay, so let me go and pick the cost first and foremost. So machinery at cost 90,000, right? So put that figure in there. And less any previous depreciation. That previous depreciation is given in the question. So do we have any previous depreciation on machine? Yes, it is here. Provision for depreciation on machine in the trial balance, 10,000. So for reducing balance, you have to less this from the cost before you multiply the rate. If you check the question and there's nothing there, it's zero, right? But this one has 10,000. So we'll less the 10,000 from the 90,000. And the result we multiply by 5%. I think that will be 4,000, because 90 minus the 10 will be 80,000 times 5% is 4,000. So that's how you work out for the reducing balance. So I want to believe we have exhausted all the necessary expenses. Okay, you now appreciate provision for bad debt, provision for depreciation. Let's join the second session and continue our discussion. Thank you very much.